Welcome to Upticks with Jake Falcon, founder and CEO of Falcon Wealth Advisors. In this podcast, we help high net worth individuals overcome financial complexities. We do this by enhancing financial literacy and discussing topics in a language free from industry jargon. Join us as we help explain exactly what having a solid financial plan means, as Jake draws from years of experience in helping hundreds of individuals get financially organized and focused on their goals. We hope you find Upticks educational, entertaining, and shareable. Now, on to the show.
Welcome back to the show. This is episode number 251, Understanding Your Financial Plan. Jake Cross, welcome back to the show here.
Thank you, Cory. Thanks for having me. Appreciate it.
Yes, I'm happy to have you back on the show today, and I'm excited to talk with you about understanding your financial plan for the audience and the listeners out and about at home and wherever else they may be. So again, thank you, Jake, for being here today. For our audience, thanks for tuning in, for watching and listening. I am pinch hitting for Jake Falcon today as he's traveling back to Kansas from Texas today, in fact, and hosting Upticks. But we are joined by a Jake from Falcon Wealth Advisors, Jake Cross. And Jake is a certified financial planner, works in our financial planning team here. Jake, what's new with you? What's going on in your life?
Not much. Me and my girlfriend, we actually got a new house. And so we have been pretty busy unpacking, packing, fixing little things. So that's really the biggest thing that's new in my life.
Excellent. That's good. Are you moved in yet?
I am. Yep. Been moved in for a few months now, or not a few months, few weeks actually. So we're getting everything situated. We feel good about it. We feel great about it. Everything's in the right places. So we're in a good spot.
Excellent. That's good. And I think, Jake, that you are probably getting indoctrinated to the world of being a landlord now that I know that you have another home that is being rented. So all part of the experience, I'm sure.
It sure is.
Excellent. Very good. Well, thanks again for joining us here today, Jake, and all the best with the new house and with the venture as you and Liv work through that. But for the audience, real quick, before we get into today's show, make sure that you're subscribed, whether it's on YouTube, wherever you listen to podcasts. That way you will get notified each and every time a new episode becomes available, so you'll never miss one. And of course, we appreciate a 5-star or thumbs up rating if you think the content, of course, is worth it. That helps other people find the show, because ultimately the reason that we do this is because we want to enhance clients' financial literacy. And ultimately, the reason that we do what we do is to help people understand what their financial plan means to them, which is exactly what we're going to talk about today, Jake. So just to, over the last couple of weeks, we've talked a lot, of course, about the markets. It's been very relevant. It's relevant all the time, but particularly relevant over the last 12 to 18 months. We've talked a lot about the market. We've talked a lot about clients' financial plans, their target rate of return, how to measure their performance and the right way to evaluate that. But what you and I are going to get into a little bit more detail about today is how all of that is designed to drive someone's financial plan and the considerations for people to really be able to make the most out of their plan. Let's just get it kicked off, Jake. My first question for you is, what's the importance? Why does someone need to have a financial plan?
Yeah, that's a good question. And, really a financial plan, in a way, helps you organize your different assets that you have, different income streams, different ages that you're projecting for. Everything in your life financially, it helps it put in one spot, which when we look at a certain situation that might pop up where we need to make a decision, that allows us to make a decision more accurately. And that's going to impact today. But also from that, the fact that we can have these different asset values, what type of assets they are, and we can ultimately project those out to the future, that allows us to make decisions about in the future, and also what the decisions we make today, how those impact the future, which ultimately, we want to plan for today, but a lot of folks, they're planning for retirement, right? Which for some more than others might be longer away. And
Sure.
So we want to make sure that we can be proactive in the things that we do today to make sure that they're in a better spot, or, in the best spot possible for themselves in the future.
Very good, Jake. Thank you. And I think one important detail in everything that you just highlighted is that when it comes to financial planning, it is not out of the norm for people to feel as if that's something that they don't need to do until they're close to retirement or they're planning on retirement. I think obviously in the world today, there is much more of a need for this for a lot of people, whether somebody's already retired, retiring tomorrow, next year, or a decade from now. Financial planning very much, is going to capture everything financial in someone's life. And that's what I wanted to ask you next, Jake. What really are when we talk about a financial plan, a comprehensive financial plan, what are the key components that are included in that?
Yeah, there's quite a bit. I mean, financial planning as a whole can encompass a whole lot. Some of these different topics or areas are a little bit more relevant for others. But when we think about a comprehensive financial plan, it might include things like retirement income planning, might include tax planning, estate planning, insurance planning, simply cash flow planning, and also charitable planning, right? Giving dollars away, how to do that strategically that's going to impact you positively, and also how to maximize the amount that you can give to satisfy what your charitable giving is. So there's quite a bit, but again, some of these might be more relevant, right? If you don't have kids, well, educational planning might not be the cards that you're dealt. It might not make sense. Or estate planning, right? You might have different beneficiaries on all your accounts. You might have a pretty, I guess, simple asset structure. You might have your bank accounts with PODs, some of these different things where if something were to happen to you, you would have a roadmap of where you want your assets to go, and it's already set up. So you might not need a ton of estate planning. So it just depends on what your situation looks like. But there's various topics that all go into financial planning, which I think is awesome, right? Because it's ever changing with tax laws, regulations, things like that.
Yeah, that's great, Jake, because I do think it is, you highlighted a lot of different components, right? The insurance piece, tax planning, retirement planning, legacy and estate planning, et cetera. So there's a lot of pieces there, but kind of back to the point we were just making about how financial planning changes for people over the course of their lives. Something like life insurance, for example, is in all likelihood going to be a lot more relevant for someone who's young and has, younger children and many years of working ahead of them, as opposed to someone that is transitioning into retirement. Their children are grown and gone and independent financially. The need for life insurance for them may be a whole lot different. So that is why the financial plan is intended to be a living and breathing plan and reflect what's going on in your life, but ultimately keeping the objectives and the goals and the priorities top of mind. Because if we take a few steps back, each and every client that we meet with, when we meet with new clients, we like to go through the process of building out a financial plan before we give recommendations on how we should go about investing money for them, because we want to prioritize what the specific goals are that we're aiming to achieve, build those into the plan, and then figure out the best way to make it happen. But as people's goals and objectives change throughout their lives, we tweak that in the financial plan, which ultimately may result in adjustments to whatever approach they may be taking. But I can't stress enough that life happens, things change. It's important to review it regularly with your fiduciary advisor. And ultimately, it's important that you understand what the financial plan reflects for you and what it means for you and your family. And our job is to help make sure that that's clear to our clients and to drill down deeper to really understand what's important.
And real quick, Cory, I want to reiterate a point that you made. Financial planning is not a set in stone document, right? It's not something that you get and that's it for the rest of your life. It will change, right? And like you said, life happens, things do change. I'm very confident that your financial plan 15 years ago is pretty different than it is today. And there might be some things that are the same and consistently the same, but again, there will be some things that change because ultimately that's how life happens, right? Things will pop up, whether it's, an illness or just a change in lifestyle. Whatever it is, it will change. And that's important because our advice might change. And that's really why we meet to go over financial planning. It's not, like I said, a set in stone thing.
Yep, that's great. The only constant is change. You're exactly right about that. And clients know that from, regular review meetings, that when the goals and objectives change, oftentimes the approach will as well. And that's the way that it should be. And that's the reason that we want to make sure that we're keeping it updated as life happens and those things change. Jake, in your opinion, what areas of financial planning are often overlooked?
Yeah, it's a tricky one. I would say estate planning is probably the most overlooked. And I think the reason for that is maybe a lot of advisors, one, aren't well versed in it because it might have to do with a lot of lawyer jargon or different tax laws that they might not just be well versed in for whatever reason. But it also isn't necessarily a comfortable conversation to have
Sure.
with, your advisor, financial planner, or even your loved ones. So I think it's typically put on the back burner, but I do think that a lot of people can benefit, from estate planning today, and also, obviously for their heirs upon passing. But it's not just for when you're no longer with us, it is for while you're living as well. So I think it's really important that you just make sure that you go through estate planning and at least have the bare documents or the basic documents and things like that set up correctly.
Yep, that's really good. I found that that is an area that's overlooked. I also think that insurance is as well. And I have a insurance license that I rarely use. Ultimately, we refer the business to other professionals that we know and like and trust. But we just on the show we recorded just within the last few months an episode with Billy Kanabe, who's an independent insurance broker, and we talked about insurance coverage and how that's something that is often overlooked for people as someone's income changes, as their asset level changes, ensuring the appropriate coverage is in place, thinking homeowners policy, thinking automobile policy, thinking umbrella, all of those things. As your assets and income and everything else change, that coverage in all likelihood needs to change as well. And it's just something that is often overlooked or not reviewed with regularity from my experience with clients.
Yeah, definitely. And I think, especially as people progress throughout their career, and let's say, they get a little bit more income, right? They have more disposable income. Heck, they might be looking at a second home, a lake house. Well, what might come with that is maybe a couple jet skis, getting the full 9 yards. But, with those different assets and those different toys also comes with more risk, right? If you're hosting more people at your house, you guys are doing a little bit more activities that require physical activities, and
Sure.
there's more risk with that. You might need an umbrella policy, but it's might not be something that you thought about, because that's typically, again, something that gets put on the back burner and it's not top of mind. But truly a financial plan will help find those different spots that you might be missing, and that way we can address it and at least have a conversation about it, right? And make sure that we know what the risks are, and we know what the solutions can be to help solve for those risks.
Yep, that's really good, Jake. And I think just kind of a quick success story or an example of this in real life. I have a client that I work with that just this year, we were exchanging emails a few months ago, and he asked a question. He's going through flight school actually to become a pilot because his son is as well. And this is something they wanted to do together, as far as bonding goes, and for a number of different reasons. But ultimately, he reached out and said, Cory, if I'm going to start flying a plane, what is the appropriate type of insurance coverage for me to have in place to ensure that the assets for my family are protected if, God forbid, something were to happen? And I love getting those questions because that's ultimately someone who understands their financial plan, and that is somebody who is thinking through what's the right way to ensure my assets are protected. So while we talk about planning, target rates of return, investments, and everything on the show, obviously the scope of information in which we have discussions with clients about and give advice on can be very, wide ranging. So we ultimately want clients to know that our job is to help them understand their financial plan and make sure that things are covered. And, ultimately the questions that they have, we're here to answer them.
Yeah, that's awesome. And I would argue too that he might not have thought about it if you weren't reviewing with him often, right? And making sure that you talk about these different risks. And when something does come up like that, it is top of mind for him because you know that you might have mentioned it to him, or at least had a discussion about some of these things.
Right, exactly. So if I think so too, Jake, I'll give myself the credit. So if he's watching, I'm just kidding. But no, you're exactly right, and that's why keeping all of this top of mind is crucial. But all it takes is, something not being in place the way that it needs to be. It's something occurring for people to realize, oh, I could have done this or that differently. We want to be proactive and stay out in front of those things. So when we think about, though, the process of building a financial plan, Jake, let's say that you've sat down with a new potential client and they're interested in coming on board and interested in hiring Falcon Wealth Advisors. What data points are really crucial from your perspective to actually build out the financial plan and help them understand what it looks like?
Yeah, there's two main topics of data points, right? There's going to be those qualitative things, and then there's going to be those quantitative things. And in terms of quantitative, looking at the numbers, obviously when we want to know what the asset values are, how they're structured, if they're in different types of vehicles, because they might be taxed differently or have different limitations, We want to know how much their cash flow is or how much they're spending, today, but also, do they expect a change in lifestyle in the future? So at what age might that change? When they want to retire, right? Because ultimately that's going to be when they're going to be pulling income from their different assets and other supplemental income sources. And then we're going to want to know some of those qualitative things, right? Do they want to provide a legacy? What does that legacy mean? Because that can mean different things for different people. How do they perceive money, right? Because we want to make sure that their habits and their behaviors, that we understand those. Because when we give advice, we want to make sure that that advice is tailored to how they perceive money, and they're just going to be better off that way, right? They're going to understand it better. We're really going to be able to give advice that's tailored to what they want to accomplish, and ultimately, it's their financial plan, and we want to make sure we accomplish whatever is most important to them.
Yep, that's great, Jake, because that is a very comprehensive list. It's a lot of information, and a lot of those figures change as time passes. And that's why we've already kind of teased this or talked it through. But I'll just go ahead and ask you, Jake, how often should somebody review and update their financial plan, and what life events or milestones might impact the answer to that question?
Yeah, I think someone just in general should definitely review it once or twice a year and make sure that nothing has changed. Because a client might think nothing has changed, but to us it might have changed
Something's
the
changed,
plan.
yeah.
Right. So that's why it's always good just to review it no matter what. But in terms of life events, right, if you have a death in the family, it's a good time to review everything, especially estate planning documents. That typically seems to be the catalyst for it, unfortunately. Um, but also, if you move, right, you might be buying a new house or a smaller house. You might be getting a lump sum of cash. You might have a change in cash flow, right? So if you move, certain things like that. College, right, could be a big one. College is getting definitely not cheaper, right? So it's getting more and more expensive. So if you are getting closer to college and maybe you want to pay for college for your kids or whatever it may be, that's a good time. Let's, come in, let's meet, let's go through it together, make sure that we're covering all the bases. So, again, any big life event or milestone, let's just meet. Let's at least talk about it and make sure that nothing's changed. And if it has, let's update it, right?
Yep. That's really good, Jake. Exactly. And you made the comment about college. It just got me thinking. Just one point to add to that would be, maybe your student loan payments are set to restart in the coming months. That's something that's going to be relevant for a lot of people. That will impact people's financial plans. It will impact their cash flow. So if someone is in a situation where that is set to have an impact on their lives, it's helpful for them to understand the context of that inside of their financial plan. But without the financial plan, there's just no way to do that. And ultimately, we don't want to make recommendations and ultimately invest capital on the behalf of our clients without a clear understanding of what they're aiming to achieve and what the objective really is. And that's why we start with the financial plan.
Exactly. Yep.
Okay, good. A few more questions that I have for you, Jake. This is kind of just getting more specific about questions that clients have when they're really trying to understand their financial plan. And one of them is, what do you tell someone that asks when they should turn on their Social Security, and how does that impact their financial plan?
Yeah, it's a great question, and a question that we do get quite often because a lot of our clients are either close to retirement or in retirement. And Social Security is a really tricky topic because at the end of the day, your break even point of when you should take Social Security at different ages is going to be dependent on the age in which you pass, right? And typically that's almost always unknown, right?
Sure.
And so it's really hard to gauge that. Now we can use, historical figures or ages from their family
Sure.
to help
Longevity.
gauge and get a better understanding of, when their history is for that. But the other big factor is going to be assumed rate of return on other investments. Because if your assumed rate of return on other investments is pretty high, well, then it might make sense to turn on Social Security earlier because that's less dollars that you're pulling out from an asset that's making you more money. So again, it's never going to be perfect because there's that one unknown factor of when someone would pass. But really, the best we can do is take the information we have today and project it out. And there's some secondary factors to take note of, but really it's going to be those two main factors of what the assumed rate of return is on other investments and also when someone would pass. So it is a tricky one, definitely.
Yeah, and from my perspective, Jake, it is the point here is for the sake of understanding your own financial plan. I do not care what an article on the internet says, or Jim Cramer, or Susie Orman, or Dave Ramsey, or anyone else, because all of the blanketed advice around that very well may be applicable to a lot of people. However, that does not mean that it's going to be applicable to you, whoever's watching or listening to the show. So when you think about your own financial plan, that's the whole reason that we build the plan. It's why we have the relationship with clients, is because really the advice should be driven by someone who is intimately involved and understands the situation, as opposed to somebody that's painting with a broad stroke on TV.
Yeah, and I think, a lot of people might just use a super basic break-even strategy of Social Security. But really what we do here is we look at their financial plan, right? How does it going to truly impact their financial plan in terms of projections, as opposed to just the break even? Because the break even can be influenced by different asset values and what type of accounts they are in terms of tax status and how they're taxed. So it like you said, it's really going to boil down to what does it look like for your financial plan, not just a basic break even strategy.
Yes, exactly. And whether someone is married or single influences the decision. If someone's married, the age discrepancy between spouses could very much influence the decision. Is somebody entitled to spousal benefits? Does somebody have a minor child, a dependent who could actually receive benefits from Social Security? The point here is really that there's a lot of different factors that influence the decision to turn the benefits on. But ultimately, that should be a discussion that you should have with your fiduciary advisor, and you should understand the impact on your plan, as opposed to following the advice that you might see or hear on the television or internet. And I think, Jake, that's going to just take me to my next question, which is, how do you help someone answer the question, should I pay cash or finance a big ticket item, whether it's a boat, whether it's a house, whether it's something else, a jet ski, a car, whatever it might be? How do you answer that? Should I pay cash or should I finance it?
Yeah, it's a really good question. And again, one that we get often. I think really what it boils down to is, what do the numbers look like? Because ultimately, that's what's going to drive our advice. I think that puts a lot of emphasis on our advice, what makes most sense financially. But then from that, we also want to understand, like, how do you emotionally feel about debt or whatever it may be, right? Do you want to pay cash, or do you maybe want to finance it, right? How do you feel about having debt? Because again, some debt isn't great, but there are a lot of debt that is good, right? Buying a house, a mortgage is considered a good debt because it's using other people's money to buy an asset that typically goes up.
As long as you
right?
can afford it. Exactly.
As long as you can afford it, right? So it's going to depend on, what do the numbers look like in terms of financing? What's the interest rate and maybe some of the limitations of that? And then what's your assumed rate of return on your other investments, to see if there's a delta or there's a difference on that. And then how do you emotionally feel about debt, right? Everyone's a little bit different, so it really just depends. But I definitely think it's crucial to look at both pros and cons of both situations before making a decision, right? We want to talk about it before we go ahead and just do it. That way we're all on the same page and make sure that we've at least exhausted all other avenues, or the best avenues possible.
Exactly. And it helps the client understand what their financial plan means to them, what the decision that they ultimately make, what the impact of that is. And I think another consideration in that, Jake, is what's the tax impact of paying cash? Meaning, if someone doesn't truly just have the cash sitting in a bank account to make a big, a purchase like this, is the money coming from an IRA? What's the tax impact of that? What does it do to the rest of your financial plan? What if someone has the money invested and they have to sell investments and realize capital gains? Is that something that's advantageous to do? There's a lot of things that can influence that, as you just described. And there's just not a one size fits all answer. And that's okay. But that's why it's important for people to understand their financial plan, and for them to have the relationship with someone that can give them the right advice and help them understand the impact of whichever route they choose to go. Okay, very good, Jake. And then lastly, any other, are there any success stories that you have, or any experiences that you have where, a well-designed and understood financial plan made a positive impact on someone's financial well-being?
Yeah, I mean, there's obviously
Countless.
a lot, right? But I think one that stands out to me is that, For example, there was a client who, they're retired, they had huge company stock in their 401k plan that was still inside the 401k plan. They started working with us, and upon taking them through the financial planning process, we really got to know what their spending levels were. And we realized that they don't live a crazy lifestyle, right? They're very happy being very simple in terms of that. And so their spending amounts were very low, but they had built up a very big 401k plan with a ton of company stock. And this particular company stock, the cost basis of it or the price that they paid was very low, which means they've had it for a long time, and they've been able to get a very large gain on it. And we implemented something called net unrealized appreciation, which is a pretty complex tax planning strategy, but it's one that we do here quite often since we work with a lot of people that work at a publicly traded company.
Yep.
But essentially, we married the two of what the technical strategies are and what their lifestyle is and how they spend money, how they perceive money. And by doing so, we were able to implement this tax planning strategy, and essentially it saved them thousands of dollars, because if we didn't, they would have been forced to take huge required minimum distributions that would have put them in a way, way higher tax bracket than they are currently, just based on how much income they need for their regular spending. So by doing so, we were able to save them thousands of dollars, which, again, is going to impact their overall plan pretty drastically.
Yep, that's good, Jake. And from my perspective, I just simply don't know how someone could come to the conclusion that a strategy like that makes sense without going through the financial planning process. I just don't see how someone would be able to crunch the numbers and evaluate all of that in the context of making a decision for themselves, a big decision that will have an impact for a long time. That's what we do. That's why, we have a team of people here at Falcon Wealth Advisors. I've joked with clients for years that most people retire just once. And we've helped hundreds of people retire over, well over a decade now. And the point there being, we want to be a resource that people can lean on through those experiences, so we can help provide perspective, help people understand what their plan means, and also give them advice, experiential advice, because I've had an unintended consequence in a lot of ways, of the work that we do, Jake, is I've had countless conversations with clients and prospective clients and people from all walks of life over the last 12 or 13 years. And people have been very candid about, if I could go back and do this differently, I would, or I'm really glad I did that. And it doesn't mean that whatever this or that might be is going to be perfectly relevant for the next person, but having the actual experience of seeing what other people have gone through in a similar situation and being able to use that to give advice to someone else is something that I think it's difficult to put value on, but it's something that's really important to help clients understand their financial plan.
Yeah, it's very true. And again, you can relate to them because you've been there, you've experienced it. Maybe you haven't particularly retired, but you've helped a lot of people retire, and you've seen what has occurred from that. And for clients approaching retirement, you have that experience that you can relate to them with. And ultimately, that's just going to help them have a better financial plan, and they're going to understand it better. And because of that, they're just going to be in a better spot for the rest of their retirement. We knew certain things to look for or certain conversations to have proactively to put them in a good spot.
Yep, that's exactly right, Jake. Thank you. I appreciate you taking the time to come on the show and for adding that on. And I think we've really kind of driven the point home today that at Falcon Wealth Advisors, what we aim to do is standardize the service and customize the advice. So nothing on the show that we've talked through today should be misconstrued as investment advice. We're talking more broadly speaking. But the idea there is it really, at the individual level is really where things get customized. So if somebody's watching or listening to this episode of the show and is interested in learning more about what their financial plan means to them, or if someone doesn't have a financial plan or is without one and is looking for support, don't hesitate to reach out to us at Falcon Wealth Advisors. You can just send me an email. It's Cory at falconwealthadvisors.com. Jake's is Cross at falconwealthadvisors.com. Jake Falcon is Jake at falconwealthadvisors.com. So you can reach out to any of us. We're all here to ultimately serve the clients that we work for. We're in an office. Believe it or not, we're actually at work. I know that's not the case for everybody everywhere right now, but we have a team in our office. We've got a great big space and a lot more room to expand, and we are open for business and certainly want to help folks. So Jake, I appreciate you coming onto the show here today. Any final thoughts?
Again, plan proactively. That's the best thing you can do. If you have questions, don't hesitate to reach out. We're here for you guys.
Excellent. Very good, Jake. Thanks again. Thank you all for tuning in, and we will see you next week.
Thank you for listening to Upticks. Click the subscribe button to be notified when new episodes become available. Also, be sure to visit our website, falconwealthadvisors.com, and click the Contact Us button if you'd like to meet with Jake and his team.